Hi everyone, welcome to Tuesday. And every Tuesday we take a look at the performance of the main board for the New Zealand Stock Exchange. Now, before I do go across and share my screen and take a look, I have created a wheel of financial freedom. It covers 8 different areas of your life, and it will actually give you a score based on a set of about 22 questions, how you rank. I would love for you to take this assessment, and it will give you an idea, like I said, how you are actually positioned, and it may even open up some ideas as to perhaps where you've got some little roadblocks. I've included the link. I'd love for you to fill it out, and I'd love for your feedback on it, because I am on a mission to try and help as many people as I can to improve their financial situation. Hence the reason for this video. Right, before I jump across and share my screen, just remember this is for educational purposes only. Definitely not intended to be personalised financial advice. If you are wanting that, you do need to go and have a chat to your own financial advisor. Right, let's take a look at the main board. So here we have the main board for the New Zealand Stock Exchange. And yabba dabba do, we have had a positive week last week. Let's zoom in. A little bit less volume though from the previous week. You can see here the previous week we had about $134 million worth of shares traded, and last week we had 114 million. So whilst it's a positive week, it's really good. The volume's more than what it has been sort of through January, February, March of this year. Obviously, the back of March is where we've seen the turmoil and everything like that, especially regarding the wars and the likes. So to see a positive week last week is really good. I'm just going to put a little button here. You can see here we've got a good solid candle, but then we've got this quite a big wick. So it's great that it's up. That wick is indicating that there still are a lot of sellers out there, and they're very cautious, and they did end up, if you like, winning this battle. Even though the market closed up, they still had the final say. And you can see there that if I hover on it, it got to a high of 13,425, and then it had a low of 12,902, with the close being 13,181. So we're looking just under $300, if you like, difference between where the high was and where the market actually closed. So it is a good sign. However, we've just got to be cautious with that wick at the top, like I say. Let's jump onto the 1 year chart and take a look and see what really happened, simply because it brings these candles up to daily candles. So if we look here, this was Tuesday. Naturally, our market was closed on Monday, being Waitangi Day. There was a really good candle, had a little bit of a wick, nothing too concerning. Wednesday was also a good positive day. Again, that wick is starting to get a bit stronger. And you can see that there at the top. Then Thursday, whilst it was a positive day, you can see there wasn't a lot of traction on Thursday. And in fact, that wick at the top is even stronger, indicating definitely the buyers were in control. And then, of course, Friday, the buyers won. That's what I mean. You just need to keep an eye on it. And these wicks, when they're at the top, irrespective of the colour, does mean that the sellers are in control. If we've got a wick at the bottom, it means that the buyers are in control. If there's a little bit of a wick, I don't tend to get too concerned. It's when I see these big, strong ones like we have on Wednesday, Thursday, that you've just got to heed the market with caution. Right, let's put our moving averages on and see what they're telling us. So like normal, I use the 30 exponential, and you can see here that the market for last week has closed above that moving average. So that is a good sign. We will now put on the 15 period moving average. And again, the market has closed above that 15-day moving average. Again, a good sign. If I zoom in, you can see that the 15-day moving average is still trading below the 30. We actually want that to cross. So we want that blue line to come up through that red line. And then that will potentially indicate that we are in an upward trajectory and the market is showing signs of recovery. At the moment, those moving averages, yes, they've turned up. However, they haven't crossed. So we need for that to happen. So we need a few more positive days in this example to actually see some decent traction happening, and it may indicate that we are in for a recovery. At this stage, we just need to sit on the fence. Let's look at the 5 year chart, because it will tell us a little bit more. If we zoom in, you can see that the 15-week moving average is really sitting on top of the 30-week moving average. But if we look, the market is actually trading below both of those. I like to look and do my analysis on a weekly chart. So that's over the 5-year period. And then just for further confirmation, I will go in and look at the 1-year chart because it breaks those candles down to daily. So at the moment, we really want to let's stay out of the market and let's see what happens for the next few weeks. I mean, these moving averages may well just, as I said, they're touching at the moment. They may just skim each other and then rise, which would be great. We just need to pause and wait and see. Now, the other indicator I'm going to put on is the average true range. Here it is here. And I like to use a 21 period for this. And what I'm looking for is I want to see how much volatility there is in the market. So I take that figure down the bottom, 286.53, divide it by the close, which was 13,181.44. Times it by 100. And so it's indicating to me that there's about just over 2% volatility. Again, nothing to get too concerned about with that. If it gets up around 5, then I'm definitely staying well out of the market, well out of looking at any new share opportunities. Now, speaking of share opportunity, I have still been holding shares because I use the stop losses, and that is what protects me when a market goes down. And not necessarily every share will go down at the same time just because the market's falling. I mean, a lot will, and I have had a lot of shares that have hit their exit stops over probably the last month, really. But there are still a few that I'm holding and that are tracking not too bad. Haven't necessarily adjusted the stop losses simply because the volatility may have increased on those particular shares, so I want to give it more room to move. But I am still holding shares. I'm just not buying at the moment. So I really hope that's helped. I hope this is really helping you with your share trading journey and education. If you've got any questions, by all means, let me know. I'm happy to help, happy to do a review for you. Or if there's any shares you would like me to take a look at, again, sing out, pop it in the comments, and we can do that. And in fact, come back on Thursday. I've had a request to do a review on Fletcher Building. So take a look at that and see how that's been performing. Used to be a darling of the share market. However, it did have a big fall from grace, but I haven't seen what it's doing now. So we'll take a look on Thursday. So until then, take care.